Hey everybody, back at it again. Dom here, the president of the And Asset Company. And in this video, we're going to get real crazy with it. We're going to talk about paid up additions, which essentially is the best part about the And Asset / overfunded whole life insurance. Without paid up additions, it's not the And Asset. What we are going to do is we are going to describe specifically what PUA is, how it affects the policy, and why we love it. I want you to think in this video, when we talk about paid up additions and we use that word over and over, think of that as going directly towards cash. We talked about base in the previous video. We talked about base being essentially death benefit. There are some more nuances. The death benefit does eventually pay out cash. And paid up additions, even though it goes directly towards cash, it essentially does buy us more permanent death benefit as well. So they both have some intertwinings to it, but think of the paid up additions rider as cash. Cash money. Balling on them Benjamins. As you can see, it's fake. Just like a little thing. Also, you see this thing over here. Yeah, that thing is also fake. It was a gift of ours, to make it seem like, we're balling more than it actually is. But anyways, we're going to talk about how we can get cash going directly into our policy with the paid up additions rider. So we talked a lot about percentages in the previous video, or at least how we're going to talk about percentages. We talked about 100% going to the base, which was essentially all going towards the death benefit. What we want to do is we actually want to minimize that base insurance cost. We want to try to make it as little as possible for what makes sense for your goals. And we want to put as much cash into it. So essentially, if I put $100 into it, I want close to $100 back into cash based around if it's going towards paid up additions. But I can't get dollar for dollar access right away because of that cost of insurance early on, some other startup costs, some things for the marketing, commissions to the agent, all those other factors. So I want as high a percentage of dollar for dollar that I can get towards my cash value so I can start using and leveraging and borrowing as soon as I possibly can, and it can start compounding. So essentially, if I put $100 in, well, maybe I can get $70 back or $80 back right away at the beginning. And by doing so, the only way to do that is by putting that paid up additions rider on there. So typically what you're going to see is, let's just say it's 70% going towards or 80% going towards the paid up additions. And I'm just making up numbers at this current time. And the base is 10, 20%, 30%, whatever it is. So we're just going to talk about specifically the paid up additions percentage. So let's say the paid up additions percentage is 80%. If it's 80%, I want to try to see, I'm going to see probably close to about 80% of the whatever premium I pay. So if I pay $100, I'm going to see close to about $80 in there within the first year. Now, there is some expense charges from a paid up additions, that you are occurring. So typically you're going to see slightly below that. So if it's 80% paid up additions, I'm probably going to see close to like $7,500 or $7,000 or something like that because of the paid up additions fee that you're having to pay right away, and some other fees, etc. And obviously the death benefit we talked about in the base. If you want to talk in more about that in depth, we'll go back to that video and take a look at that. So essentially so far we've talked about two characteristics inside of the policy. We've talked about the base, all about that base, about the base. And we talked about cash, money, paid up additions, right? So that's how you can think of it. And we typically talk about them in percentages. Certain percentage is going towards the cost of insurance, which is the base. And then the certain percentage is going to PUA, which is directly towards cash. You have to put that rider on there, or else if you don't have it, it's not considered an And asset. So I hope that gives you a better understanding of what paid up additions is, or at least for you as a consumer, the most easiest way for you to conceptually understand it. Hey guys, in complete transparency, I completely messed up in one part of the video. I talked about PUA. I started talking small numbers using $100 and getting a certain percentage back. I said around like $80 is what you'd want to see if it was about 80%. And then I started talking about there was going to be some expenses in the PUA expense at the beginning. And then I started mentioning about $7,500 and $7,000 is really what it should be towards what you used to see within the first year. But what I meant to say was $75 or $70. I'm human. Please forgive me. But I just want to make that clear so you guys did not get confused at all when you guys are listening to the video. And I hope that this clears it up for you. Thanks again for watching.